everyone. Welcome to the market update here for Tuesday, June the 27th. If you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. I'll be happy to answer those for you. A little bit of a rebound today, but if you notice, I talked about on Thursday to watch the close on Friday. If we closed it lower at all, it was going to form a bearish inside candle, weekly candle, which should lead to a little bit of a downside pullback. Now we're rallying. We did pull back yesterday, but we're rallying a little bit today. When we get to the charts, I'll go over a little bit of what I think is going on. A very light volume rally for the most part, which is something to just make note of this week. Typically what you would see in kind of a wave B type of situation. And I think that's kind of what's going on right here, is we might be getting a little bit of a wave B. Now, not going to spend too much time on the directional alerts because they're not really showing us anything significant. Remember, all we're looking for on the directional alerts is the market overbought or oversold. That's the main thing that it's going to be telling you. And if it's in the middle, it's not telling you anything significant about the trend, other than it could continue to trend in any direction. It could go in any direction at that point when it's not stretched one way or the other. And so we've got, momentum's right in the middle here. Breadth is still right in the middle. Obviously, sentiment is still real high, but it's been high forever. And it would take a lot just to show you how far sentiment would have to come down. I don't know what's going on here. I don't know if this is obviously some sort of this little drop right here, probably some sort of a data glitch. But here's where sentiment is. Here's where it gets extreme right here. So you can see basically for the whole year, since the beginning of the year, sentiment has been in this extreme range, and we've noted it. Well, we noted it for a while, but at some point you're just like, okay, it's, you're not going to base a trade off of that alone, that the market is extremely complacent. It is just really odd that it's been this complacent for this long. I'm not the only one that's noticed that and commented on that. Just about anyone that knows how to trade has made note of that. But again, the market can be irrational sometimes, and sometimes it can stay irrational for a while. You don't want to expect it to make sense all the time. If you do, you're going to be really disappointed a lot of times. And it makes sense that the market would do that. A marketplace has to rely on uncertainty, and I always talk about the market sometimes like it's a person. It's trying to hurt the most people as possible, or trying to trick as many people as possible. But it's just the market's just a reflection of individuals and human nature, and that's why you want to study human nature and predictive patterns of human nature. There's no better place to study that on the earth than the stock market. It just takes in so many emotions and reflects so much of human behavior that if you're looking at studying that and reading that, it's a great place to go to do that. Now, as far as the buy-sell ratios, again, they're not showing anything extreme. We do have the sales outpacing the buys a little bit here, kind of a crossover taking place, but that'll probably switch right back down when this updates after the market closes, with the market rallying a little bit today. And this other sentiment indicator is all the way down. So it's not showing any sort of extreme, although again, I want to point out that it was signaling the pullback ahead of time. It did bump up against that, and that's why we look at these in every class. We want to see if the market stretch one way or the other. And this can help us if you'd like to trade trend reversal type trades or counter trend trades. I like to do a lot of those. Mostly with option trades. this can be very helpful with making those types of decisions. You combine extreme market extremes with reversal candles, and you can do very well with a system like that for a long time. Although even with a system like that, you'll have periods where it's not stretched one way or the other, and so it may be a situation where you don't have great trades every single day. All right, so let's get to the charts. And before we start focusing on the charts here on TradersPro, I want to go back and pull up, because this is what I was showing you on Thursday, where I can pull up a weekly chart here. And I wanted to show you that bearish inside candle. Now, it formed it on the two main indexes that we really focus on right now, which is the SPY, S&P 500, and the NASDAQ 100, the Qs. You can see here, we had that weekly close that was lower. It's contained inside of the week before. So the week before last was a bullish week, a big up candle. Now, again, it's not just the inside candle. You have to bring in context all the time into this. And what you'd like to see for a bearish inside day is a run up ahead of that candle. So we had a run up right here, big upside candle, and then we have this inside reversal candle. So it opened the week right here, it closed the week last week right here. That usually leads to some sort of a pullback. Now, again, it doesn't necessarily have to happen immediately. Here was an inside candle right here after a run up. It had a little bit of a pause week, actually tried to rally that next week, and then it got a drop right down in here. Now, it could be that something similar is happening this week, where maybe it tries to rally again, and then the bigger move down happens next week. Although one thing to keep in mind is we've got the 4th of July next week, and it's next Tuesday, which means Monday is going to be a very light trading day. There's going to be a lot of people that are going to, take a 5-day weekend or whatever, or a 4-day weekend or a 5-day weekend. They might even take Friday off and just combine that all and take a, be able to have a nice long break, summer break, so to speak. But even then, after the 4th of July, you're probably looking at some lighter trading as well on Wednesday. And so now that lighter trading can lead to big moves one way or the other. They could lead to a big move up or a big move down. It doesn't take very much. In a lighter trading environment, it doesn't take very much to move prices. And that's why I'm a little bit suspicious today, because the volume is pretty light up to this point, and yet it's showing a pretty decent sized move today. I'm always a little bit skeptical of that. And it's a little bit too early in the week. Now, if we were having a day like this and it was Friday or Monday, next Monday, I'd attribute that immediately to the holiday and people taking time off. But we're too early in this week. I don't think there's that many people taking off this early. And so we'll see. We'll see how things close. And, it's a little bit harder to maintain that momentum into the close if it's light volume or light buying. You'll tend to get a fade at the end of the day, so to speak. So we'll keep an eye on that. Now, I do have marked here. You'll see at the top of not last week, but the week before's candle, I have this green line up here and I have this red line down here. Whenever you have an inside candle, you look for a break up or below, down below. Usually it's going to be below because it's a bearish reversal candle. You're looking for a break below the bottom of that candle that's the inside that this candle is inside of, this big up candle right here. You look for it to break down below here. So if we go back to this one right here, we had the bearish inside week here, another one right here, and then this was the week where you broke below that inside that big candle. That would be bearish, more bearish for the market, but this is also one to keep an eye on up here, because if it breaks to the upside of that candle, it basically takes out the momentum of that bearish reversal. Okay, so you know, if we see this week, if we keep rallying this week and we break out above here, then you just take that reversal week, you block all this out. It doesn't matter anymore. It just reverse that momentum. Now you do this with any sort of major reversal candle. For instance, if you had a shooting star candle, which is this one right back here. Actually, this was both a shooting star and a inside candle right here. A shooting star is when you have a tail all the way up here. It opens, runs all the way up, and then closes lower. Usually you like to see this up here, though, up above the price. But again, this is good, too, because this is not only a shooting star, but it's also a bearish inside candle. But you would look at the top of that tail right there. If the market then suddenly reversed that and moved above that, it wiped out all of that bearish momentum, and that's a bullish trade. In fact, I've got a trading system. I haven't used it for a long time because it's not my favorite, and it's not as reliable as some of the other systems I use. But I used to call this the failed reversal trade, and I would, and you could do this where you see a reversal, and then as soon as it trades above the high of that reversal candle, it broke that momentum. A lot of times it'll take off, and well, you think about it. I mean, you know, everyone's turning bearish right here, and then suddenly it wipes that out, and they've got to cover their short position or something like that, and they're scrambling to get out because they thought for sure they were right. Now this works as well on you get like a bullish hammer formation. This is not let's say this one, let's say we closed up where this is more of a hammer. You got the tail down here. That's a bullish formation. But if you came back down and dropped below that low, a lot of times you'll get a sharp drop out of that. All these buyers that pushed the price back up start bailing, and it wipes out that momentum. So anyway, in the case of this inside candle, that's why I have this marked. I have it marked on the Qs as well. And so far the rally today isn't changing. It isn't changing the reversal candle yet. And then, like I said, I'll show you how I think things are kind of playing out here. But here's the Qs. Now, this is one that is one of the reasons why I'm still pretty bearish in the near term is the context here of just how far away. Now, this is a weekly chart, remember, but look at the 20-week moving average, how far away we are from that. And then here's the 200-week moving average. You know, we've mentioned this many times, how stretched the Qs are. We're aware of that. Now, again, it doesn't mean it can't still go up in the near term. It can't become even more stretched in the near term. Now, in the near term, we just looked at the directional alerts. The directional alerts aren't stretched, so there could be some room that where it breaks out and goes higher again. Still, this is just a little pullback, and it breaks out, and those directional alerts become stretched again. Definitely possible. Okay, but that's why I have these marked, so that I know, because when I switch to the daily chart, you can't see the weekly candle. So that's why I have that marked. Now, on the other ones, real quick, Russell 2000, it actually closed below the previous week, which was pretty bearish. It was the first close below the low of the previous week for a while. Now it's rebounding a bit today, but that's worth noting. And then the Dow did the same thing. It closed below the low of the previous week, and both those are bearish moves from the weekly chart standpoint. Okay. Now, again, none of these are really predicting a massive drop, so I want to make sure that we're we're clear on that. I'm not suggesting that the market's we're setting up for a massive drop here, but just a normal correction within the trend is what we're kind of expecting here. So if I go back to the SPY chart, let's go back into TradersPro here. Now we had this initial drop right here, and I think that's probably wave A, and then what we're getting here is probably a wave B. Now we'll see. Usually wave B will be more sluggish. From a volume standpoint, it's already looking sluggish. And let me flip back over here. We can see the volume. See how low the volume is. Now there is a lot of volume that comes in that last hour, so we should be up around here by the end of the day, but it's still relatively lighter than it's been. Especially if it fades into the close, and it may not. It's held this candle pretty solid so far all day for the most part, at least as long as I've been kind of watching it since the open. And so that's one thing to look for is how do you close? Because if it closed off the highs, that'd be more of a sluggish close. But I'm looking at wave A, get a little bit of a bounce for wave B, and then get a wave C. Actually, I'd like to get back into this, back towards this breakout area. This is where I'd be a lot more comfortable getting long, because especially if it shows more of a corrective pattern, more of a choppy pullback, and alleviates a little bit of that overbought condition. I'd also like to see a lot of those mega cap tech stocks come back down a little bit further too, because I think there's a lot of froth in those. But we'll see. So that's kind of, that would make sense as far as combining that weekly candle to what we're seeing right now. That weekly candle still could allow for a bounce or a little bit of a rally for a wave B, and then still end up dropping lower for wave C, where it breaks down below that bullish weekly candle from the week before last. All right, so now it could, like I said, now what if it doesn't? What if it comes right back up and breaks back above that weekly candle, the top of that weekly candle? Yeah, I mean you're probably taking off and running right there for a few more days as the shorts get squeezed again at this point, because there's a lot of people. I mean, I'm not the only one that sees some of the stuff and sees this overbought market and looks for bearish reversals at points where the market could pull back or start selling off. Anyone that is a heavy short seller out there, and a lot of them have been beat up a lot lately with this run, are looking for those same things, and that's why you get these little pops right after if it tries to drop, and you get a day like today. A lot of that is that short covering that takes place. It kind of, remember, but you have to buy to close those short positions. And so that buying pressure adds a little bit of that pop initially. How you can tell when it's a short covering rally or a solid rally is usually what happens after that. Does it keep going higher? That usually tells you new buyers are coming in. And usually when new buyers are coming in, the moves higher aren't as sharp because there's a lot more motion in that short covering, which is why you get the big up days. And that's why I don't like to chase a lot of big up days, because usually that's fueled by short selling. I like the more when the market's really bullish, you'll get smaller up days, but you'll get a lot of them in a row. Meaning you'll go up for, Dow will be up 50 points, but it'll be up 50 points for 4 or 5 days in a row or something like that. It's more of a steady rise, and that's usually a signal. Anytime anything's quiet in the market's moving up and it's kind of quiet, usually that's a little bit more of a bullish environment. When it's more emotional, anytime it's more emotional, it tends to be more bearish. Again, you're not going to base a trade on something like that alone, but it's just a general characteristic of markets in general. And there's a term out there that you may have heard, that you never want to short a dull market. Well, it's kind of that concept of if there's not a lot of emotion showing up in the market, it's harder for it to drop. And now there's two ways to look at that. You could say, well, the VIX is kind of showing that, but there's not a lot of concern. Yeah, but as low as the VIX is at this time, in comparison to where the market is, it actually is kind of showing the opposite, as I've been mentioning for a number of weeks, which is that it feels like it's a coiled spring, like it's building towards something big that's about to happen. But we haven't seen that happen yet. We've kind of been grinding forward, so it could be accurate in the near term that it's a little bit of a dull market. But we'll see. What's really amazing to me, to be honest with you, is, and this is just this is why I've gotten to the point where it's like, okay, this is what should be happening, but the market's in one of these crazy moods. And I've been through a number of these over the years. I've mentioned many times about the internet bubble of 2000, where stocks went up and it was like crazy. It's like, how can it keep going up? Now, back then, I traded it to the upside. I didn't know much how to recognize bearish reversals back then, and I got burned pretty good when it did finally drop. But I mean, there are periods where it's like, this does not make any sense at all. But you got it. That's why you still come back to the trend. What is the trend doing? Are you breaking out above bearish reversals? Okay, that's what the market is doing. That's why we have a lot of stocks right now in the portfolio. Is, again, I'm suspicious of it, but it's been moving up, so you trade it. You trade that move. All right, so let's take a look at the Dow. Kind of the same thing. This is looking more like a wave A. See if this is kind of a wave B bounce. Now that can play out. You could have the sharp drop for the initial wave A. This could be wave A of B. You could even drop a little bit for B of B and then C of B. You usually get an opposite ABC pattern in that B wave. And then you get wave C coming down. So it could be that we bounce back and forth a little bit this week. But that would kind of confirm that a wave C is coming. I've got some put option trades that I got into Friday and yesterday off of that bearish weekly candle. But I bought out a lot of time. I've got a little bit more time than I normally use for them, just for that reason, that if we do get a little bit of a wave B bounce, that those trades can still work. I can still capture that wave C or that next move down. Now, after that, if all the markets are doing are forming an ABC pattern, that should alleviate that overbought condition a little bit better. Maybe not get back down all the way back down to that 200 week moving average or anything like that, but it would be a better entry point for an uptrend, because now you're trading an impulsive move up as opposed to chasing an overbought trend. And again, the danger in that is you might make $1, but you've seen how quickly markets can drop, and they could wipe out five days of gains. You could have you're trying to chase that last dollar of the uptrend, and then suddenly you wake up and you've lost $5. It can happen that quickly, where And that's why I don't like to chase overbought markets. I like, wait for the pullback, wait for the ABC pattern. Consolidation a little bit makes it a little bit better entry point. Q's, Russell 2000, it had the biggest drop of the indexes, but it's also had the biggest rebound today. It's up 1.5% today, so we'll see how that closes. Bond market, again, with a lot of these, but this is also what's kind of confusing is that you've got the bond market, you've got oil, and you've got the dollar. Well, maybe not the dollar as much, but the bond market and oil in particular have just been moving sideways and just not showing any sort of trend direction, and that's just odd. That you tend to get a little bit more educated traders that are trading bonds. The average trader doesn't come in and suddenly start trading bonds or oil, commodities in general. Usually they start with equities, and then when they get really good, they move into those areas. So there's usually an assumption that bond traders are a little bit more experienced traders, and same with commodity traders. And so when you see these markets not, moving sideways like this, you start to wonder, is this a reflection of smart traders just not having any sort of idea where the markets are going? Now, it was really confusing a couple months ago, when we're in that big sideways range on the S&P as well. That was a conclusion we were coming to, is that nobody knows where the markets, any of these markets, are going. They were all moving sideways and trendless, and we were trying to figure them out, but it's like everyone's in the same boat. Everyone's looking around, trying to see if anyone else knows where things are going. Everyone's trying to look for the leader, so to speak, and there was, but the chart was reflecting that, and that's what I really loved about. The only thing I loved about that period was it reconfirmed my trust in the charts, because the charts are telling you where what the big institutional traders are, what they're doing, and at that point they were telling you they don't know where the hell the market was going to go, and it was clear on the charts. All the charts were just stagnant and sideways. But now on the oil or on bonds right here, again, when I say sideways, I'm really meaning, for those of you that might be new, I want to show you the range. We got to back out a little bit to see that range. This is what we're talking about right here, the upper part of this range, lower part of this range. There's also a middle part right here where we found a little bit of support back in the spring. Now it's kind of acting as resistance right here. And you can make the argument this is a little bit of a bearish ABC pattern that's maybe leading to a move down. But the bottom line is that, and this is the conclusion we've come, is the trend is clearly sideways. A break above here is bullish, a break down below here is bearish, and we're just waiting for that to happen. And we've been stuck in this middle for a long time, which is why we have been trying not to spend too much time analyzing it, because it's clearly in a sideways range with no clear direction as of yet. Until it does, we're just going to assume it's going to be stuck in that sideways range. Gold has been kind of trending down. Now, I wanted to take a couple minutes here on gold. I got a question from someone about, Jerry, you were talking so much about gold being bullish, and that's all you could talk about for a couple weeks there, and yet the trend is going down. This is what I always get back to. You got to know what context you're looking at things. When did we start turning more bearish on gold? Well, when it broke to a lower low right here, that was concerning. Then when it corrected, it started to move more sideways. So you had the previous move down. I was talking about that. for several weeks because it took a couple weeks for it to make that pattern there. You could throw in a longer term chart and you could connect. It broke this trend line right here. It's right in that same area that we turned more bearish. Now, I remember I had a gold trade that got stopped out. I was pretty confident it was going to get stopped out, and I was just going to wait until it did. I didn't. There's no reason to just go jump out of it early. But in the near term, yeah, the trend is down. It's broken these major technical levels. I definitely have recognized that. But when I was really ultra bullish on gold, what I was at the time, it was, well, first of all, it was the near-term trend was still trending up. So the near-term trend was still bullish. It was right in here. We were still holding that trend line. But remember, the big reason why I'm long-term bullish on gold was that long-term chart. And so I can pull it up a little bit quicker on my other charting service here. Let's look at that monthly chart of gold. And this is going back years, decades, okay? You had this cup formation right here. Here's a cup with handle formation, one of the most bullish trading patterns out there. And if it breaks above the top of the bowl, it will often go up about the same distance as the top of the bowl, the bottom bowl. That's where I have this line drawn right up here. Has potential to get all the way up here. Now, remember the context we're looking at. We're looking at years here. So, I'm not suggesting that gold's going to go straight to there over the next 2 weeks. Okay, it could take years, but that was my point. Is if you're looking to just park something for the long term and just kind of forget about it for a few years, but has the potential to go up, way up in value, that gold chart is signaling a long term bullish move. Now, would I just jump in it right here? Probably not, because the near-term trend, we've broken that trend line right there, as you can see. I'd probably wait to see if it pulls back a little bit further. But that's where the ultra bullishness came from, was the long-term charts were bullish. And then at the time when I was commenting on the bullishness of gold, was we were still in this uptrend where we were having higher highs, higher lows. And that's why, what do I always tell you? The most important part of trading is money management first, but then trade management right behind that. What happened? I stopped out at a point where I knew I was wrong. I set my stop where I knew I was wrong, and I'm out. I took a loss on that, but I tell you what, if gold starts resuming the uptrend again, it looks more bullish in the near term, I'll be right back in it again based off of that longer term chart. So always remember context. Context is important, and I really get this a lot with my option trading. People have questions with my option trading because, well, just recently we have the trend is clearly has been up. If you're looking at that intermediate trend. But it's showing counter trend candles or moves that you can take advantage of, and I've done that over the last week. I'm very short term. I'm looking at just the next day or the next 2 days when I'm option trading, and so if you don't understand that mindset or exactly what I'm looking for in that mindset, then you're not going to understand what I'm doing, or you're going to think everything I'm doing is always counter trend, or sometimes it can be counter trend, but it's not just a blind counter trend move. There's something that's signaling a high probability of a short-term pullback or something like that, like a bearish inside week. Yesterday did not surprise me at all. The market sold off. That's what it was flashing on Friday with the way that closed. You can trade that. All right. Oil, same thing. Again, you're just seeing just a sideways move. Now, the previous move was down, and so, that's something you do take into consideration is, whenever you see a stock moving sideways, what was the direction it was moving in before it moved sideways? That's where it's more likely to go after it's done moving sideways. Again, it doesn't mean it always will, but it just makes sense. You want to bring physics into it or what have you. An object in motion is more likely to continue, and that it takes a lot of force to reverse, a lot of energy to reverse a movement of something, right? It takes a lot more energy to reverse this trend than to go with the trend. And so that's looking at the path of least resistance. The path of least resistance so far is still to the downside based off of that context there. But if you say, what is the current trend? The current trend is sideways until it breaks out of this range. This would be a little bit more bullish. This would be more bearish. And we've been stuck in that range for a while now. So that's been kind of our conclusion for a while. The dollar has been trending down lately. We had a little bit of a bounce right here, but we're back to kind of moving lower again. Now, it could be that this is A, B, C, and then it goes lower. You get this back and forth where it could rally still a little bit, but still be part of a bearish correction. The fact that it's more choppy right in through here is more corrective looking. It's been back and forth after this drop. So I'm leaning a little bit more towards another downward move based off the behavior of the dollars right now. Now that could change, but that's what I'm seeing right now on the chart, and what I'm leaning a little bit more towards. The VIX, we've talked about this for a while, and we saw we had a little bit of a bullish inside candle on Friday. So we had the bearish weekly reversal candle on Friday, but we also had the bullish reversal candle on the VIX on Friday. I mean, that was a kind of a no-brainer for Monday going lower. The VIX did move up a little bit yesterday, but it's right back down with the rally today. Now, I'm done saying that I'm shocked the VIX is down this low, or I can't believe it's down this low. It does signal to me that it's difficult for the market to rally significantly with the VIX down this low. But what I'm kind of comparing, what I'm using now is using those when the market gets overbought and the VIX is low. That's been signaling pretty accurately when the market's about to pull back a little bit. We've had some of those pullbacks lately, and so this could run a little bit further. We could still rally a little bit further. VIX could come back down, but these are pretty low levels. And again, it's not that the VIX can't get down this low. It's like, if you're new, it's not that the VIX can't get down this low. It's just that usually you're seeing that at the end of long bull markets, when the whole sentiment, the whole market is bullish, and there's still a big portion of the market that's bearish, and so it's just odd. It's just weird. It's just, but like I said, I think this is one of those things where you don't trade this alone. This is why we don't just say, oh, the VIX is doing this, this is our trade. But I think this is one of those things that we're going to look back on and say, hey, the VIX was signaling for several months that a big pullback was coming, and then whatever the event, there'll be some trigger that will say, hey, that's what caused it. That's what that news event caused the move, or what have you. And I don't know what that'll be, and probably it'll be something we're not expecting at all, because usually that's the case. A lot of these big drops happen, just like I said a few months ago with the regional banks. We didn't drop very much off of that, but something like that where nobody was watching that or even concerned about that, and suddenly that's what we all focused on for a couple of weeks, was every regional bank out there. Same type of concept here, that it'll be something that comes out of left field and freaks the market out. All right. Chip stocks. Now, what I'm kind of watching with the chip stocks is this was a deep pullback right here. So here's the rally up here. This was more than a 618 retracement of that move. Um, Now, you can have deep retracements and it can go higher. But when you start to get deep retracements near a run up, when you've had a run up, it's usually it's a sign of again, it's just these subtle little clues of rolling over, so to speak. It starts to give the chart a little bit of a look of rolling over. And what it often sets up is a bearish head and shoulders pattern. Now, this high is going to be complete is going to be important because in a head and shoulders pattern, you can't go above the head. You don't want to be going above that. In fact, you don't want to be going much above the left shoulder. You can go a little bit beyond that. But that's why the next couple of days will be interesting to see on the chip stocks at least. Does it hold this and roll over? If it does, if it starts dropping again, you're going to have a pretty well-defined head and shoulders pattern. You don't have it yet because we don't know if this is a right shoulder, and if it rallies up much further, it would change that. But even if it rallies up to a new high, again, you start to see a deeper, the higher low right here is barely higher. Your higher highs, a lot of times you'll barely go to higher highs. It just starts to look sluggish. So that's what I start to kind of look for there. And I'm looking for this also on those mega cap tech stocks. We'll go through those here real quick too, because it's something we want to focus on. Now, you want a bullish sign. Hey, transportation stocks have really been on a tear. They tend to be leading the Dow industrials, and they've been outperforming. So there's a pretty bullish. Remember, and I tend to, the airlines are included in this, and it makes sense to some extent that business travel is healthy. That's usually a sign the economy is healthy. I get that aspect of it, but one thing that what I've started to do when I think the transports are signaling something is I tend to focus a little bit more on the rail stocks, the shipping companies, and you can Google Dow Transportation Index components, and it'll tell you what stocks are in there. But I like to look at UPS and FedEx, people shipping, the shipping stuff all over the place, because the reason why I don't trust the airlines as much as a signal of economic strength is because of COVID. There's a lot less, and technology. There's a lot less business travel nowadays than there used to be. A lot of people are doing Zoom calls all the time. That saves the company money. Maybe we should be watching Zoom. Maybe that should be added to the transportation index or something like that. I don't know, but the point is that it may not be as reliable. Although you can make an argument though for like just leisure travel. People are when consumers are more confident in the economy, they're going to be traveling on vacations more and things like that. So, but anyway, the real breakdown is especially if you're really comparing it to the purpose of it was moving products around. I tend to really kind of look at the rail stocks and the trucking companies, and then compare those to the Dow Industrials, see if there's any divergences there. But now you want to, if you're watching this one, you really want to keep an eye on this little breakout area right here, because that's we keep bouncing up into that, and then it rolls over. You're getting a little bit of a triangle type formation with this. If it can break above here, that'd be really bullish for the transports. And so that's something to keep an eye on. I believe that's different from the Dow chart. Let me see here. Well, I don't know. Dow chart's kind of in the same area. You're kind of looking at this resistance area right here. But you do have kind of an inverse head and shoulders pattern right there. If it breaks out above this, kind of be breaking out above the neckline, and that can be a pretty bullish signal there. Bitcoin's been on a tear. We got a Bitcoin trade, kind of a Bitcoin trade with the Riot trade in the portfolio. Real quickly though, let me go over mega cap. Nvidia had a pretty big down move yesterday. It's rebounded pretty nicely today, but it was showing a little bit of, showing just a little bit of that breakdown, possible breakdown. But again, you want to watch this breakout area right here, see if that holds. If it dips below that, that'd be a lot more bearish. By the way, this is maybe a good example of how to look at this week, because I did a put option trade on Nvidia recently, did pretty well on it, but it was based off of this bearish. We had an overbought market and we had this bearish inside candle, very similar to the bearish inside week that we've been looking at with the S&P and stuff. Notice the next day it did open lower and tried to rally. It did have an upward move that next day, but then it rolled over, and then a few days later we got that drop. So that's kind of the way I'm looking at today. I don't know yet today, because it really depends on how much further it moves. So that's why I have those lines drawn on the charts there, and hopefully you made note of those. And if not, you can go back and review the recording later. But getting a bounce after a bearish or bullish candle, getting an opposite move is pretty common. It's intended a lot of times to shake people out of trades. Now, sometimes it can be legitimate and it can stop you out of trades or give you a loss, but that's that. I just wanted to show that, because if you're looking at today's rally as it just completely reversed that bearish inside candle. No, it didn't, not yet. It could just be an attempt to rally, and like I said, we'll see how it closes too. Does it fade off the close? That's what happened here. It faded a little bit off the close there, and then dropped the next day. So, but this is going to be, it's at a key spot. If it drops below this breakout area, that's all we're looking for with these. We're starting to see these have been the leadership. These are what led the rally. Now, I'm not saying that they're the only ones leading the rally right now. It has broadened out. There are more stocks participating than there were, but this was all the talk a few weeks ago was, hey, we're rallying, but it's these 7 stocks that are rallying. And I expanded a little bit more than 7, but these are the ones everyone was focused on. Microsoft, again, here was the previous low. Here's the run up. This is a deep retracement. Could it still rally off of that? Yeah, it could. But this is what you start to see near tops, is those retracements are deep. If this was still in a healthy upward move, that would have made more sense right by that breakout area, that it would have gone higher off of that candle right there, and it didn't. And so this is a key spot to watch. If it drops below there, that'd be the first time that it would have dropped to a lower low, at a higher high right here. Now a bullish argument would be, yeah, it's pulling back though, but it's gotten a lot more choppy through here, so that it's not as impulsive. Well, and so what I would wonder then is if maybe this is kind of a wave A, maybe it rallies up a little bit for wave B and you get that wave C. But anyway, this is something we'll watch as well. Again, all we're looking for on these is, are we seeing the breakdown in the leadership stocks? Apple had a little bit of a bearish reversal candle yesterday, but it's right back to new all-time high today. But again, you can notice this. It's been, ever since it went to a new all-time high, it's been having trouble going higher. It's kind of been more sluggish, but there's no breakdown yet that well, I thought yesterday might have signaled the start of that, but it reversed it today, and it's basically reversing the reversal candle with the move up above today's high. So we'll keep an eye on that one as well. AMD already kind of broke down a little bit. It's kind of at a key area here, though, where where it gapped up off the earnings report, NVIDIA's earnings report. We'll see if buyers show up again right there, but it clearly is kind of broken its upward trend that it was in. Now, this isn't considered one of the 7. I have it in there because it moved very strongly when NVIDIA broke out. But this is interesting because there's a lot of these chip stocks that made those big moves that probably shouldn't have made those big moves. Intel's one of those where I don't think it made a sharp move off of the NVIDIA stuff. But when everyone's talking about AI, they're not including Intel in that discussion. They're only talking about NVIDIA and AMD and maybe a little bit of Marvell right now, but not Intel. So if it rallied off of that momentum, once that momentum dissipates a little bit, Intel is probably going to drop pretty sharp off of that. So we'll see. Google already kind of come down a little bit. You can make the argument on Google that it's kind of already kind of formed a bullish ABC pattern. Maybe it's coming down here. That could be a little bit of a bullish reversal candle. I want to see if the market looks like it could rally in the day. I'm going to see how that still looks. The volume was really light or pretty light on it when I checked it earlier, but that could be like a short-term call option trade or something if that momentum holds into the close, especially if the market is intending to go higher. Amazon still looking like it was breaking down yesterday, but it's still kind of holding. But again, you can see it really sharp. And again, it moved higher here, but barely higher. Here it moved higher, but immediately it's gone sluggish. So you're just seeing that buying exhaustion. Again, buying exhaustion doesn't necessarily mean that the stock has to go down. All I'm pointing it out to you is that you learn to recognize it. What I would rather see is a bearish reversal. I want to see sellers actually coming in, and that's what happened yesterday. That was a bearish reversal candle, and there was decent volume behind it to where sellers were coming in right there. But again, those are you can kind of. This is when I talk about reading the price action. That's what I'm reading those candles and seeing if you can see that momentum slowing up a little bit, especially when you're in an overbought or you've been in an overbought market and you're seeing those signals. Again, it's not going to perfectly time a move, but I just want you to be able to recognize it. You usually don't want to be buying aggressively when you're seeing buying exhaustion. You like to see selling exhaustion on the way down, and then the buyers are coming back in. That's why I like to get in on nice, decent pullbacks, and then start to see that movement back up. Those bulls going up the right side of the bull. You always hear me talk about that. Those are some of my favorite patterns to trade for that very reason. Tesla had a sharp sell-off yesterday as well. Kind of rebounding a little bit of a bullish inside day there, the opposite of the bearish reversal, a little bit of a bullish reversal. Again, though, it's still extreme. It's still pretty overbought. That didn't really alleviate that much. So could that be wave A? This could signal maybe a bounce. Maybe that's just wave B, and then you get wave C. Boy, if the wave C came back to that breakout area, that's where you want to be a buyer of Tesla right there, if it can pull back into that area. Netflix, not as much. It's part of the FANG stocks, which is why I included it in this list. And it was on a tear earlier as well, kind of pulled back. I wouldn't count this as the major reversal chart. Meta was part of the 7. And again, we saw almost a bearish engulfing yesterday, but it's rebounded today. But there again, just seeing a little bit of buying exhaustion. And, this is one thing I always talk about too, is that we always talk about a pullback alleviating an overbought condition. It needs to pull back a little bit. It could just move sideways. You could just move sideways, and that can alleviate an overbought condition as well. And maybe that's what some of these mega cap tech stocks end up doing, is just consolidating, and they move more sideways, and then they get to a point where buyers are again attracted to them, and the fact they didn't pull back very much tells you the buyers are holding. They're not selling, and that could be a bullish signal as well. All right, couple of stocks, and then I want to get to the portfolio as well. Off of the new buy list, I like this HLX 97 strength rank. Wait for that to load up. Wait, the loadings. And what I liked about this is something I look for in a bottoming reversal type process, is you get a move down, and then you get that impulsive move up, and then it pulls back in more of a choppy kind of corrective type look. Now, the reason why I love these is that either this is the bottom and this is the start. This is a wave 1, wave 2, and you're going to get wave 3, 4, 5. Or this is just wave A, wave B. You're going to get a run up here for wave C, probably into this area right here, and then it's going to drop, but you could still trade that move right there. And where do I come up with this area right here? Well, wave A and wave C tend to be about the same length. So if I already know what wave A is, if this is a wave A, then and if this is the end of wave B, which I don't know that yet, but if this is going into wave C, then it should get up to around this area right here. The reason why I love these types of conditions is that if the stock is bullish, if this is a bottom and the stock is bullish, it should go higher. If it's still bearish, but it's in a correction, it can still go higher in the near term before going lower. So there's a pretty high probability of at least getting this move right here. Again, it doesn't always work. You still have to manage it, but it's a high, when you talk about areas on the charts that have high probabilities of success, this is one of those. If you can learn to recognize that type of condition. And really the key to it is you see an impulsive move off of a decline, an impulsive move up, and then it's followed by more of a corrective move back down. That's when you know you have that type of trade situation. Now, a lot of times I want to back out, look at a longer term chart. So on top of that, you had this big run up, and then this could have been a larger ABC pullback. And this is starting a move up. Or this could be wave A. This could be, it could rally a little bit. That could be wave B, and then it has a bigger move down. Like I said, there should be a high probability of getting this move right in here off of the context of that chart. And you could manage it pretty easy. You put a stop right below here. If it doesn't make that move and stops you out, you don't lose very much. If it does make that move up, you make some decent money there. All right, another one, OLMA, 97 strength rank. Again, uptrend coming out of a correction right here. Nice upward move here. You could probably put a tight stop right below here, or get it below this breakout area right here. You skip down here to the CRS. Just uptrend, and then you've got whenever you see a stock moving sideways, you want to pay attention to direction it's moving in before it moves sideways. That's where it's more likely to go. After it's done moving sideways, it just looks like once it's out of that sideways correction, it should move higher. And then one more, this MTW, it's in the industrial product sector, and kind of the same idea here, but you combine it with kind of the bowl-shaped move, and it broke out to a new high right here, and then consolidated that a little bit. I'm going to go ahead and I'm going to make a trade on this one. I'm going to keep a pretty tight stop, though. I'm going to put a stop in right down, right around 17 right here. I don't want to risk very much on this, but that's a pretty bullish looking pattern there. So I'll put a stop in at about 17, keep it real tight. So I'm risking about $1. Yeah, I'll do about 400 shares. So if I get stopped out, I'll only lose about $400. Go ahead and purchase those. All right, let's take a look at the portfolio here. I am going to jump out of. Let's take a look at them. I almost got stopped out of a couple trades yesterday. Now, when I stop, I usually like to have the stock below my stop at the market close. There are times where I recognize it's going to get stopped out, and I may get out earlier in the day, but a lot of times I'll wait till the end of the day and then just check. This was one of them that was really close to stopping out. Now it's rebounded today. And again, I really don't want to get stopped out of this because this looks corrective and this is impulsive right here. It should move up. And so, but I got real close to getting stopped out on that one. This SGML, I almost did. This was trading below my stop here, but it came up at the end of the day, just above it. Now I'm right back down to it again. Where are we at? I'm probably real close again today. My stop's at 36. The stock's at 36.18. So maybe I'll check it at close. If it's below that, I'll stop out. This is one though that I've been close to getting stopped out for a little while. And it's a deeper retracement too of this move up right here. I mean, this could be at ABC, but we're past the 618 retracement level, and so if I get stopped out, I'll probably be happy I get stopped out. Probably a good thing at that point. Snowflake, I had a pretty tight stop on this one too, right below here. So I'm still in danger on that one of getting stopped out, but it had a little bit of a rebound today, inside day, see if that can rally. Although the NASDAQ's up high, pretty good today. I'd like to have seen that up a lot stronger. That's not a good sign that it's not acting as strong as the index. All right, these are our hedges. SARK, I'll probably stop out of this one. Just remember, I'm just using this as a hedge. Now the market may drop again, so I could be right back in it again, but we're trading below yesterday's low right there. I was up a little bit on this one. I don't know if I'm up any more on it, but I'm going to go ahead and see where it's at right now. So I got in at 35 and it's at 36. So yeah, I'll make a little bit of money on this, but I'm going to go ahead and get out. 250. Now it's saying the current is 36.86. So made about $800 on this trade. That's not bad. Let's look at now the SQs. They're down today too. I might hold on to this one just to make sure I have a hedge in case it does turn back down again. If the Qs are up again tomorrow, I'll stop out of this one, because it probably could mean that we're going to reverse that reversal candle. And then this one was the kind of the Bitcoin proxy trade, up a little bit today, but we've got our stop down below here. This one should move up if Bitcoin continues to move up. And then we added that new one, MTW. Now we're grinding a little bit higher, 144,000. But now we're starting to add some positions, and we're not getting crazy yet, but we'll start adding more, especially if we get a decent pullback and it looks like a better entry point. I'll get a lot more aggressive with some trades at that point. You can see that portfolio go up a little bit better. All right, that's all I have. We'll see what happens. Again, watch those key areas that I pointed out from that weekly candle. Yeah, we're still holding the gains of the day here, so it's not showing any sort of slide. Again, though, this is what I was talking about. The volume is pretty light, so we'll see. We'll see how that looks. But yeah, the green line right here, the red line, those are what the green line's at about 439 on the SPY. If you want numbers here, the red line is about 430. So a move below 430 would be pretty bearish. A move above 439 would wipe out that bearish reversal candle. All right. Thanks, everyone. Have a great week. We'll see you Thursday for the stock-specific class. Bye now.